Welcome, everybody. We are back for another interview for our Asset Protection and Wealth Preservation series. I'm delighted to have Heath Goldman with me today. I met Heath, I think now 12 years ago. I was actually at a conference, and he was the one asking all the intelligent questions that were way over my head on that particular subject matter. And so somewhat naturally, for those of you that know me, I sought him out because I thought that he would have a special skill set, and that's definitely the case. Before we dive into our conversation today, for compliance reasons, I must read his disclosure. Heath Goldman offers securities and advisory services through World Equity Group, member FINRA and SIPC. Icon Wealth and Legacy Partners and World Equity Group are independently owned and operated. So we get that part out of the way, Heath. For the benefit of my audience, I know that when you and I have talked in the past, your wheelhouse, you have a niche in the business owner space, real estate owners, and things along those lines. Just for the benefit of the audience, please just kind of share what you do or who you are, how you do it, kind of how you got into it, and just kind of a general open, if you would, to familiarize our audience.
Yeah, I'd love to, Anthony. And I have enjoyed our professional relationship. I've enjoyed our personal relationship over the years even more. I brand myself as a financial architect, which is a term that most people have never heard about. But as soon as you use the word financial planner, oh, Heath, I know exactly what you do. And, I'll give you a quick example of what this looks like. I've got a 68-year-old client, has sole and separate property from a previous marriage. He has a current wife who has adult children from her previous marriage, and there is no estate plan. The business started in the garage. For all intents and purposes, it has a value of, a cost basis of zero. And right now it's on the market for about $50 million. So I was hired 2 weeks after the company had been listed. And now I am literally running rapid here, trying to come up with a plan that makes sense for this gentleman to help him mitigate some taxes potentially, what the estate plan should look like. And that's really the work that we do as the architect, because most of my clients have amazing advisors already on their team. What they don't have is that architect or that person that's going to sit there and design the plan and then have the capacity to work with the other advisors already on the team. So that kind of just gives you kind of an overview of how we operate. As you mentioned, most of my clients are either closely held business owners or real estate families who are in the business of real estate.
That's great. Thank you for sharing that. You talk about business owners, you talk about real estate landowners and real estate owners and such, and the description that you gave of that client of yours, it kind of makes me think about one of the things that is becoming more and more prevalent in our industry, of course, which is family office planning, which kind of ties into my question, which is multi-generational businesses. You've got a husband, a new wife, adult children, and all of the things that you just talked about. What is involved with the creation of a multi-generation business, and kind of what are the key points that you would share with people, broad strokes, of course, on what they need to be mindful of?
It's a great question, and I think about it often, and I think it really just revolves around one simple term, and that's called communication. I've got a relationship with the male client. Okay, I don't really have a relationship with the female client. Some advisors may have a relationship with the female client and they may not have a relationship with the male client. And it's all about, well, who controls the money? And it's not about who controls the money. It's about a whole family dynamic, because the government doesn't care who controls the family entity. It cares about the size and the complexity and the strategies that the family's utilizing. So, I think it's exceptionally important to have ongoing conversations with the patriarch, separate than the matriarch, with the patriarch and matriarch together, with the adult children who are going to be involved in the business moving forward. Then you're going to have conversations with the adult children who aren't going to be involved in the business moving forward, because then you've got to be very concerned about, from a patriarch and matriarch, grandma and grandpa, whatever it may be, how do we distribute these assets in the future? If you've got a client who's worth 50 million and the business makes up 45 million, and the other is a vacation home and the primary residence, and you've got two adult children that are going to be inheriting the business, well, we've got two adult children that we love equally well, but just chose to go in different professions. And now what do we do to help them in the future? What do they get to inherit? How do we distribute assets? And so all of these conversations need to take place. My clients never planned to fail. Oftentimes they failed to plan before they came to me. And I think that is the tagline that I want people to kind of remember when they leave here today.
Well, I mean, look, the communication, and then going back to what you said earlier, just the collaboration amongst the various advisors to make sure everyone is on the same page, including the adult children, and what the wishes are, how those things are going to be followed through. You made me think of, when you're talking about multi-generational business, if we say we need communication, what are some of the mistakes? I don't know, 2 or 3 top mistakes that you see. Now, you've already said failing to plan, so we'll put that one, maybe at the top of the list. But in terms of the actual, like, you come into somebody who actually has done planning or different things along those lines, what are some of the 2 or 3 mistakes when we're talking about this type of clientele that people really need to be aware of?
I'm not sure in any specific order, but I'm working with a client right now, happens to be one of my closest friends in the world, and that's why I'm helping him and his family. But I read the estate planning document the other day, and the assets are distributed out at a certain age to their only daughter. Now, I said to the estate planning attorney, I'm not certain why we're not going to keep the assets in trust. And for the audience purposes, keeping the assets in trust does not necessarily take away the control that the inheriting children or grandchildren have. What it really does is protect those assets from creditors, claims, judgments, and possible divorce. So if I'm not giving up control of my money, per se, as the person inheriting the assets, by leaving it in trust, why wouldn't we take the extra layer of asset protection and leave the assets in trust from mom and dad to a daughter, no matter what the age is? And I think, if I remember correctly, the document stated at age 35. And so I see that one all the time. Wealthy families should utilize a continuation of the trust structure, just if for nothing else, asset protection purposes. I see a lot of people who don't plan in a timely fashion. For example, I said to this gentleman the other day, and I know you're in Arizona, I'm here in Los Angeles. The local airport, the municipal airport, is Van Nuys Airport. And I said, think about taking a 737 and trying to take off at Van Nuys Airport. And he looked at me, and kind of chuckled. He goes, it's impossible. I said, well, it would be exceptionally hard, maybe impossible. But my point to him was, I now have a business that's been listed for 2 weeks. This planning, capital gains mitigation planning, should have been done and looked at a year and a half, 2 years ago. And it hasn't been. And that's a huge one. If you are even having an inclination that at some point you will be exiting your business, and let's be honest, we're all going to exit the business, depends under what circumstances. You need to start looking at what your options are. And those are and then the third one, I think, right along those lines is, what is the entity that you're selling? So many people go to their CPA and said, well, what's the best tax structure for me? And you often hear S Corp or LLC. It may not be the best structure on an exit strategy. So if you are looking for capital gains mitigation planning, the entity that is utilized is exceptionally important. But that was 40 years ago when we started the company. Take a look at your entities now and take a look at when you might be wanting to sell the company.
Well, and that sounds very similar to just regular, like, non-business estate planning, right? You've got somebody who was married before, they're now on their second or their third marriage, and they didn't change the titling of life insurance policies or retirement accounts or the beneficiary, and they haven't updated their estate plan in who knows how long. So it sounds like it's actually a fairly similar comparison, maybe just a little bit more involved because of all the moving parts. You were talking about asset protection, capital gains minimization. Heath, that is exactly why we're doing this series about asset protection and wealth preservation. Protect what you have and grow what you have and keep what you have, right? Like, that's kind of the whole genesis of this. We are in some crazy wonky times. 2020, I think all of us go down and remember this year as being kind of crazy. Are there any different strategies that you're utilizing now, or maybe not strategies, but things that you're talking with clients about now that maybe you weren't talking about with them in 2020, or in 2019, by example, as it relates to this planning, generational businesses, and so forth?
The answer is yes, but I'm not necessarily certain it has anything to do with 2020. I'm a huge fan of New Year's Eve. I'm thinking about skipping it because anything I can do to get rid of 2020, I'm all for. But the reason for mentioning it is nothing to do with COVID-19, which is what a lot of people seem to think. I will tell you that with this virus that we are facing, many of my clients have found the time to review their estate plan, review their life insurance. I will ask each of you to do me two favors. One, when was the last time you reviewed your estate plan? Please go look at it. If you do not have one, reach out to Anthony and get a recommendation to get one done. And when was the last time you reviewed your life insurance portfolio? Those two areas we're spending a lot of time on. Now, that wasn't necessarily the specific question. Biden's tax plan, as I've seen, talks about reducing the estate tax exemption to roughly $3.5 million per person. It is currently, rounding purposes, $12 million per person. So we are talking to our wealthier clients about wealth transfer strategies that might make sense for them, assuming they have a net worth that is apropos for these types of strategies, because I'm not looking to make my clients desolate. What I am looking to do is to minimize the wealth tax, the transfer tax, the capital gains tax, whatever it may be, on their assets. So that is something that I think is a huge issue, must be done by 12/31. And if Biden does not win the election, then then we don't have the issue. But we don't necessarily have enough time to do adequate planning long term if Biden does win the election.
I'm glad you brought that up, because one of my questions that was kind of occurring to me, I'm sure you're having clients saying, how does the election affect what we're going to be doing? And this, that, or the other thing. And at the end of the day, none of us really know specifically until things happen what's going to happen. And uncertainty is just a part of election years. So I appreciate you bringing that up, because one of my questions is going to be how do you think that the election is going to affect the planning? Not from a political perspective, but from an actual tax, and you basically answered my question in advance, Heath. So thanks for having a crystal brain on that one. When you're talking with clients, like, what are some of the ways that you've been able to, when you have that client who's kind of on the fence, or you have a prospect, or you just have somebody that you're talking to at like your daughter's softball, right? Right, I got softball right. Now, of course, there's probably not a lot of softball right now, but maybe they're getting back to it. You're talking to a business owner. What's a common, what are common questions that folks ask you once they identify you as the financial architect? You kind of get to chit-chatting about who you are, what you do. What are the concerns or the things that people are bringing up to you? Because we know it's wealth preservation, it's capital gains tax mitigation, it's asset protection, it's all those types of things. What are the questions you're receiving on a fairly regular basis?
I'm going to make a comment and then I'm going to answer the question specifically. I do not have enough clients coming directly to me. And what I mean by that is that they don't realize they need somebody like me because they have a financial advisor, they have an insurance agent, they have a business attorney, they have an estate planning attorney, possibly. And then I ask the question, when was the last time all 5 of those advisors sat in the same room discussing your current plan? And the answer is almost always never. Oh, but I haven't seen my estate planning attorney in 20 years. I see my accountant once a year, but it's usually in January or February. And as we all know on this call, if you don't see your CPA before 12/31, there are very few strategies available to you for income tax reduction planning. So I try to get my referral sources, who are the same types of professionals that you would think about, CPAs, attorneys, and financial advisors, to ask the probing questions. And I'm not talking about the personal questions. Hey, I noticed you've got a daughter that is involved in the company with you. Is she earmarked to take over the company? Absolutely. Is she your only sibling or the only child? No, she's got 2 brothers. Neither one of them are involved in the business. Well, they're both kind of involved in the business, but could you envision them taking over the business? Those are the questions that we need to be asking our clients. And if you're on this call and you are the potential client, you need to be asking yourself those questions now. What does my plan look like? What do my documents look like that support my plan? And as you mentioned before, communication, there's a third C I like to use. You said I said communication, you said collaboration, coordination. Everybody's got to be on the same page when it comes to the benefit of the client situation, because I'll tell you a quick funny story. When I was a kid, I loved to do puzzles. And it was inevitable that I would get to the end of a puzzle and I'd be missing one piece. right? Mom vacuumed it up vacuumed it up. It fell in between the couch. The dog ate it. All of the above could have potentially happened. But that puzzle was not going to be put together with glue and hung on my bedroom wall because it had a hole in the middle of it. Now, it was a 5,000 piece puzzle, one hole, but it ruined the entire plan. And that's the concern that I have. Pardon me. That's the concern I have, is that people do things in silos. They don't look at the collaboration. They don't look at the coordination, and we need to.
Moving forward, when you talk with your clients and they're sharing with you, hey, these are the things that I want to do. I have two siblings. I have two children. I have this, I have that. Again, I realize everybody's different, but what are the common concerns that your clients, once they've gone through this process and they've identified, yeah, you know what, I need to get all 5 of these people in the room together. I need to make sure that we communicate. But you're having those individual conversations, whether it's with the patriarch, whether it's with the matriarch, whether it's with the adult children, whomever. What are often the biggest concerns, like the top 2 or 3 concerns that they're expressing when they're talking with you, and perhaps even the other advisors if they're in the room at the time?
I'm not sure my kids are capable of handling the amount of wealth that I have, is often the biggest one. And I will tell you, once I start working with the families on a multi-generational approach, it's not even a concern that the parents should have. They still look at them as the, 8 and 10 and 12 and, and 20-year-old kids. Now they're 50 and 60 years old and they've never really had a conversation about money. What are you trying to accomplish? What do you think we want to do, Mom and Dad? What do you want to do, Bob and Sally? And it's all about, as you mentioned before, it's about the communication. And a lot of times it doesn't happen. I'm thinking about making, my best friend my successor trustee on the trust. Do your kids respect your best friend? Well, they had a little bit of a falling out a number of years ago. That might not be the best person to choose for this, even though it's your best option. It may not be the best option for your plan and the kids. So understanding everybody's goals and objectives during life. I tell people, you want to disinherit your son, you better let him know during lifetime, because your best friend, your daughter, whoever it may be on the successor trustee is going to have to deal with that issue. And it is not going to be fun. And you're not going to be around to explain yourself. So if you're going to do it, it's okay, but you better explain yourself during life. And that's the one thing I strongly encourage my clients to do.
Well, Heath, I really appreciate your time, your insights, and your expertise. Communication, collaboration, coordination, making sure the expectations are clearly identified. I loved all of that stuff. Final thoughts, any final thoughts or any final wisdoms or insights that you're like, I really wish Williams had asked me this today? Any other things that you want to get off your chest or share?
No, not necessarily, but I will say the one thing that I will encourage the audience to do is to make sure that you stay on top of your plan. When something changes in your financial life, you need to go back and look at the estate plan. You need to go back and look at your life insurance portfolio. And we obviously know that Anthony and his team do a fabulous job on the investment management, but you need to make sure that these ancillary pieces are still supporting what your ultimate goals and objectives are. And when that changes, I guarantee you something else has to change in the planning process to support and document it.
Heath, I appreciate it. That's a great way to close. Thank you so much for your time.
Anthony, thanks for having me.
All right, cheers.